go. Uh, Matt, thanks so much for agreeing to come on the Beyond Tax Season podcast. Your and my paths crossed, I believe, in one of my marketing outreaches. We had a little conversation, and I was just totally amazed about all that you're doing, even though you're really not the classic accounting practice, but you've morphed into this thing that seems so helpful for accountants to know about, at least in my opinion. So if you wouldn't mind, kind of give us a how you got here type of thing, and then riff into this thing you've built.
No problem. It's a warning out there for all the tax practice professionals. This is a lot more interesting than doing accounting and taxes and things like that on a daily basis, which is why in 2006, I quit my CPA firm job where I was doing audit and tax for different real estate companies, different internal controls work for different CPA firms as well. And I also did the tax side of things. But I was a little bored. My personality was a little bit different. I was really interested in real estate at the time. And of course, like a genius, I quit my job in 2006, right before the real estate crash occurs, thinking that I'm going to be this real estate entrepreneur and genius at the time. And I'll have to say, I was a real estate genius for about a year and a half before I got my butt handed to me and knocked out by the real estate crash that occurred. But to be honest, it was probably one of the best things that ever happened to me. Anybody that's running a business or understands, the ups and downs of running a business knows that through those failures and those punches, you grow massively and you become a lot stronger through going through that perseverance. We were flipping houses. We got an office at the World Trade Center in Long Beach on like the 23rd floor, thinking that we were, amazing. My two stepbrothers at the time, computer programmers and electrical engineers, both jumped in the real estate with me and quit their jobs to do the same thing. And so we thought we were, up here flipping houses all of a sudden and realized we didn't know anything yet, right? And so fast forward after taking major hits, now we have flipped over 1,000 houses now. We have over 35 million lent out to flippers in different markets. We've lent over $500 million for different projects over the years. And we've raised a little bit over 200 million in private investor capital for all different types of investments, from multifamily to short-term rentals to mobile home parks, debt, accounts receivable financing, private businesses. All, and to me, it's the matter of the capital that you deploy needs to be secured by hard assets and things like that to protect investors' capital. And one of the biggest things that I help clients with is finding tax mitigation strategies within their investment vehicles. And so we help clients, me being a CPA, my mindset is always looking at not paying taxes and finding ways of mitigating this and how many ways can you do this, right? So we've specialized in helping 1031 exchange investors, for example, find replacement property. And we have seller finance strategies set up to be able to hit the sales price, the down payment, the loan amount, so that we can combine all three of them together for a client and make it a truly turnkey type investment, where the investments are already fully renovated with tenants in place, with management in place. So someone is stepping into a fully turnkey asset from month one on a 1031 exchange, or a package of assets. That could be single family homes, that could be multifamilies. Sometimes in the multifamily space, if you don't have very large amounts of money, you're buying that as a tenant in common with someone that's still managing the asset for you, so it can be passive. So, and what's cool is that I realized that 90% of real estate investors out there do not want to do the work. They don't want the phone calls. They don't want the tenants and termites, the toilets and the headaches that go with managing their portfolio. So on any of the assets that we put together, we actually built in asset management on top of that, built into the financial projections, so that we can continue to help manage those assets for our investors if that's what they want, or they want to take that workload off their shoulders. we're really the professionals at doing that, right? The right asset management procedures across the board. We used to own a property management company. We sold that because that's just a giant headache of problems, of course, to deal with. So now we focus on managing the managers, making sure the assets are efficient, things are, progressing on rent growth, and dialing in the detailed operations of asset management for our investors, along with providing them assets that they can have as a silver platter investment for their tax mitigation strategy. So I mentioned 1031 exchanges, right? We also do cost segregation studies on every single property we do, including single family homes. It only costs like, $1,000 to $1,500 to do a cost segregation study on a single family house now. And so we actually go take that and do it for every client so that they can add that part to their portfolio. And we especially do it with our short-term rentals, and we have a system set up so that they can substantiate out their 100-hour requirement of doing the most amount of work. So now they can go take the short-term rental cost segregation bonus depreciation losses against their ordinary income too, not just their passive income like normal. And that's one of the big problems, is that a lot of people don't have enough passive income for these cost segregation deductions to really benefit them a whole lot, right? They don't have tons of passive rental income. Yeah, that might mitigate the taxes on the income that's getting created off of that investment. But our short-term rentals make like 10% on their money, plus the cost seg benefits on top of that. And we also do the asset management and have,
All right.
management in place. So
Well,
really cool stuff out there, man. I'm telling you.
I, and just in that short, what was that? Maybe 7 minutes? I wrote down 1, 2, 3, 4, 5, 6, 7 things to kind of dig in on. And the first one was scars out of the '08 crash. And one
Yeah,
of the things you tripped into in one of our past conversations was you now have full background checks on anybody in your system because of one of the scars.
absolutely. Yeah. And
So tell me, where would that come in? Is that in a multifamily? Is that in the management company? Where or just anybody?
so normally where we do that, that's most important. One, any employees or contractors or subs that we're working with in different ways are getting a background check. We actually even go through and hire a private investigator now to be able to review even further, to check further anything else that looks like a potential red flag, because there's so much fraud out there. You want to be careful about that, right? Anytime we invest with any other outside operator, like in the multifamily or mobile home park space or anything like that, we're also doing full background checks. Now, we actually act as the direct operator on 90% of the deals we do, versus going to outside operators. But we have a 200-point due diligence checklist we do on these outside operators before we invest with them or raise capital for a project that we're involved with them. And that's super important with how many times we've been stolen from. Your best friends, some good friends of mine have taken money from me just because there's a difference between business and friendship, right? There's outside people that I felt that I could trust, that now it's like, okay, well, what happens when things go wrong? What's their right decision? So now to me, it's background checks every time, slow, steady growth with any new business partner that we work with. See how that communication does, see what happens when something does go wrong or a problem comes up. Do they freak out, or do they focus on the solution to be able to solve that problem? And that's really the key to a lot of it. Are they getting emotional, or are they able to handle that swing? Because we all hit the swings. It's a matter of, are you going to be able to focus and solve the problem, right? So
Right.
that's what
How
we do
big
now.
is
It's
the
super
team?
important.
How is that? Where do you draw the circle around what is your team? I heard you say you took you no longer are the manager, you manage the managers. So when you draw the circle around your team, what is that entity called? How many people are in that on that team?
Gotcha. So it depends on the asset class specifically, right? Any type of real estate transaction, you have, your contractors, that's a giant risk factor of the contractor involved, very, very important team member, and having backups for those team members also. And usually we vet them over a period of time, right? You have the right contracts in place, you have the right insurance in place. You have to make sure you do baby steps with them and monitor their progress and show expectation. So there's a process that goes with each team member, along with multitude of different team members that you have to manage, right? The contractor's one, the property manager on the ground is another one. Before we go into every new market, we usually test 5 new property managers because 3 of them fail on us and another one has major inefficiencies. And there are some that are really good that we step in and actually help even further because of our accounting expertise. We know 90% of businesses are bad with their financial side, given us being CPAs and things like that. You see this stuff, right? And so, after running a property management company and a lending company for years, the financial side is the number one risk of any business. So I have to look at the financial viability of those management companies as well as their processes to make sure, is their accounting in order? Is their marketing in order for their new leases? Is their service calls and investor communication in order? There's certain categories that we go through and we're vetting these different operators and different team members in place. Now, as far as my internal team, we're all like finance majors and engineers here. That's pretty much where we came from. One of my chief operating officer, Rick Wang, he's an engineer, has been with me for over 10 years now. My brother-in-law, also a finance major, he's my chief operations officer as well, on a different part of the business. He's a finance guy, has been with us for over 15 years as well. We have multiple people, depending. We have transaction coordinators, we have asset management teams on our team, along with construction management, along with loan servicing, right? And then we also have fund administration and coordination and investor relations. So those types of things on the fund side, you have to have the investors protected and taken care of, right? You also have to have your operations taken care of, and then the quality control piece across the board as well. So, and it depends on the types of assets. We do lending, we do flipping, we do holding, we do multifamily. All those things come with different team members, right? So
Your menu of options. That's why I wrote down here. Where is it? Where is it? Where is it? Where is it? You have. Oh, here it is. Here it is. Uh, you're not just real estate. I mean, let's
correct.
not get into the alternatives. Let's leave that one for another time.
Yeah.
At the higher level, I've been in an organization that purports to be a CFO for real estate investors, and we would get assigned these folks, and then we would help them understand how to organize and track their investment. And it seems like there's a big gap between, oh, I want passive income. I want diversified passive income. I want to eventually get out of my job. A lot of times it's doctors, right?
Mhm.
And when we got deeper and we said, well, did you know that your management company charged you this, 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 and this? And when we start doing the net, you're not making any money. So,
Right.
so where do you come in? And I think you come in as basically a turnkey where the doc doesn't have to pay attention. The doc gets to come into either I'll manage your individual property, or I will let you into a syndication. And now we go to and it's not a glossy brochure syndication. It's you're closer to the deal syndication. So a lot of that, all that Merrill Lynch glossy, here's your REIT that they never pan out. You've got deals that actually live and breathe, and that I'm going to let you have the baton back. Uh, what's your turn period? How long? I mean, you do cost seg, you can't just flip those right back out, otherwise you have to recapture. So is that enough for you to talk some more about
Yeah, I
closer
got you
to the
covered. So, when I'm recommending investors to invest in passive assets, it really comes down to a tailored solution for what they're most comfortable with, their current income and what they are, making and living off of, and what's going to create that financial freedom to get their cash flow streams past all their monthly expenses without having to do all the work for it, because that's the key, right? They don't have time to be full-time investors. Everybody thinks I got to go buy a house myself or flip a house myself and do all the work, right? We actually go and structure deals and structure investment portfolios for investors on the alternative side, where they might invest in single family that they want to have direct ownership of, right? They own those themselves, and we set up asset management and an LLC in place to be able to shield them for liability protection, but we help them manage those assets, but they have direct control over those assets. And that could be multifamily, that could be mobile homes, it could be single family, it could be a lot of those assets, right? And you get the equity growth, you get the tax benefits, you get the principal reduction on the loan, and the inflation hedges associated with those types of assets, right? And then you could have direct owned promissory notes where you actually own the note. You're the lender, you're the bank in that situation, and we act as servicer. Same type of thing as the asset management, but we manage that, actual investments back and forth with those operators, so that our investors are just getting statements with checks every single month, and we're being the operator handling those aspects. And that's great for a cash flow stream for those investors, that because most of the time real estate, it has good cash flow, but it can be volatile, right? It can go up and down as things get vacant, or there's a repair that occurs, or there's a market cycle change. Promissory notes, you have, secured against a hard asset, usually 75% or less of what the asset is worth. And then usually it's a cash flow asset or a fix and flip project that is 12 months to a 5-year term, and then you can roll it into new deals. So I invest in both the
You're
equity
doing
side
it.
as well as the debt side to give an even portfolio for those investors.
Let's stay up at your skill set. Let's not go down the menu yet.
Yeah, yeah, no worries, no
Because
worries.
because I think we could do a separate podcast on each one of your list of your menu items.
Okay.
Uh, I want people to know about this resource, because what's your capacity? How are you finding your deals? Uh,
Okay.
all that level of stuff. Um, make sure we talk about your identity shift. Uh, and your scars. I wanted to tie it back into a book by a guy named Keith Cunningham, The Road
Okay.
Less Stupid. Have you read
Nice.
it?
I have not, no.
It starts off with, he's very humble now, because he got chopped off the knees in the oil crashes. Not one, but two. He said, if you could take back three of your investments, how much more money would you have? um, so let's not get into 1031 clearinghouse. That's, you've got that. I guess the biggest thing is, how have you built this so that it's still economic for the investor, so that they're getting more of the dollars that are in the deal? I mean, because it seems like
Mhm.
really is your, in addition to your safety margin of managing risk, you're helping the investor be closer to the deal.
Yeah, and I think helping them, giving them options is really the key, right? Being able to show them they can create a diversified portfolio based on their comfort level and what they want to invest in is key. Some of them are very comfortable with direct owned assets. Other ones want to have a portfolio of syndications where they own shares of an LLC that owns the asset and it's actively managed by somebody. Some people aren't comfortable with that structure and giving over the keys to someone else to invest. But there's some benefits like not having to qualify for any financing and not having to put up all the money on a giant class A multifamily deal to invest in it, right? Relying, not going through the learning curve of having to do the operations yourself, right? So it depends on the specific person. And what's great is that we can help provide uh, a portfolio of different types of syndication investments like this, in different asset classes in different markets of the country, along with direct owned assets if those investors are more comfortable, or for being very strategic on the tax side. A lot of these syndications come with big cost segregation deductions too, but they might come at different time. You have less control over that, and you can't necessarily just go sell it. Whatever the business plan is the business plan, and someone else is operating that. Versus direct own, now you have a way to be able to control that yourself and mitigate taxes you want yourself, right? And so there's a lot of tactics out there to be able to massively reduce your, tax obligations through the cost seg studies, through installment sales instead of 1031 exchange sometimes, because the seller finance strategies can be really lucrative and create a much higher return on investment, especially if you're sitting on cheap debt right now as well, where you can use that leverage to your advantage and do a lease option type sale or a land contract instead. So there's all kinds of unique strategies you can use to
Okay,
mitigate taxes in real estate and other assets that is so cool. It's unbelievable. So,
so where are you finding your deals? It sounds
yeah,
like your ability to put together deals is only limited by the people that have money to put in deals. Where I mean that's part of
gotcha. Hmm.
being able to buy. I mean, where do we make our money in real estate? When you
On
buy
the
it.
buy side, right.
Right.
And so really it comes down to a couple of sources. We are sourcing them directly, doing direct mail, pay by click marketing, networking, finding wholesalers, finding different people that find deal flow to us, and getting it constantly sent to our inbox, and going over a very proprietary, structured due diligence process where we go through and like vet deals super fast on the individual asset side to see, is this something we want? Nope, get rid of it. Is it fit this mold for what we're looking for? Great. Let's go and analyze that further and move that forward. So that's one system of it for the direct assets that we directly operate. The other aspect of it is finding other operators that need help on their deals, that need the capital sources, that need the operational expertise, and they just happen to find the deal as well. And so we go out and we go analyze it and do all the work as if we're taking the deal down ourselves, and then we go and act as full GP in the deal and take over operations as well on that particular deal. So people bring us these deals. We go to mastermind events to find them. We're going to calling tons of brokers to find them as well. We're doing boots on the ground type approach to find this deal and permeate ourselves into multiple masterminds where there's high level operators across the board, where we can just provide resources and value based on our skill sets. And so we get to cherry pick which ones we do, and we do a crazy due diligence deep dive on the team member involved, as well as the deal, as well as the legal docs, the financial projections, the market as a whole, before we dive into any particular deal. And so there's a lot that goes into the, I'll say, deal acquisition process, right? Whether you're buying them directly yourself, or you are finding them through another source that maybe someone specializes in mobile home parks. And so we go to a company that sees that, but I don't raise money for them unless we're fully involved in that project and have control over that project to be able to protect our investors at the same time, right? So
Right.
that's how we structure it. And there's always a preferred return too. You don't invest unless the investors get paid a preferred return first. So there's a certain hurdle rate before the operator or the general partner is allowed to get paid. This gives alignment of incentive for performance. And you also don't want major fee structures up front on those where they get paid tons of money up front. They should be making most of their money on the back end, maybe compensate them for the work that they're doing and all the homework up front, but most of their money should be on the back end with investors. So that's how you incentivize performance along these investments.
Yeah, see, I've got the scars of taking clients, and I'm a financial advisor in 45 years, just now getting recertified with my Series 7. So
Nice.
reg kind of pops to mind. But of the REITs, the private REITs that we put out in the marketplace seemed like they never came full cycle. The whole idea was we're going to get big enough and sell to a bigger operator, get folded into a big Newberger Berman or a BlackRock or that kind of thing, but it never happened. So
Mhm.
what how are you answering clients' questions, potential clients' questions about, hey, I've heard this story before. What makes me, how can I really trust that it's gonna be different this time, that it's gonna be as real as you depict it?
So your question really is how do you do your homework on these deals to make sure they're real, they're going to work, that the deal is, truthful, right? At the end of the day, compared to a lot of people, like you said, got burned in the past with private REITs and private investments. And we just went through a major cycle in the multifamily space where interest rates rose and multifamily had a 20% drop across the board just because of the interest rate environment that occurred, right? And so a lot of markets, you had a major shift in valuation because of that interest rate environment. Interest rates massively move that space because it's a matter of return on investment in multifamily, right? And so when the interest rates go up, the rents don't go up commensurate, then you got a problem, right? And so a lot of people just went through a lot of pain. And so the biggest thing to do is one, you got to do your homework and you have to be very strategic. That's why we have, and we can give to your audience, a 200-point due diligence checklist that we use on all of our multifamily deals. For example, we're creating one on the lending side. It's very similar to this, just some modification pieces of that to give away to people as well. We have it for our internal purposes, but we're cleaning it up for to give to others. And so what we do is we start off with the operator first, right? It's what's their track record? Can we do background checks on them? Can I talk to 20 of their investors that have invested with them? Can I see their previous quarterly reports to see what kind of reporting they're doing? I've gotten horrible reporting where they're like, here's a 5-liner on an email, and there's your quarterly report. It's the worst thing on the planet. And the worst feeling as an investor, too, when you invest in something like that. And so, doing your homework on who the operator is, their trustworthiness, doing the background checks, the criminal checks, talking to investors, and looking at their financial projections to say, are they being conservative or are they trying to sell you a dream right now, right? And understanding that and understanding the assumptions within the financial projections can tell you if that investor is pushing you or pushing those limits or not being conservative, right? So.
We're talking about you, man. You said you raised 500 million. How much of it has gone full cycle?
So we've raised 200 million in private equity. We've actually done over 500 million in private loans. We sold a lot of those to banks and insurance companies and things like that, and that's
Really?
how we recapitalized, afterwards. So it depends on the asset class you're talking about when you're talking full cycle. I started in 2008. I mean, you talk about the single family homes that I bought in 2010 and 12. The the cycle has gone through and I've killed it on those holdings, and that's
Have
one of
you
my
have you sold those, or or are they now just
um
cash cows?
so we've sold over 1,000 and we still have a giant, like over 100 properties in our own portfolio that we hold long term too, and we've gotten massive increases in value there. We've also did an audit. We used to sell a lot of properties to international clients in Japan and China for where they can invest here in the U.S. and we have translation services set up for them and we help them with the tax mitigation aspect of coming here to the U.S. and investing. And we also sold a lot of properties to military vets where we teach them how to create financial freedom in their life. And we did audits on those about what our projections showed versus what occurred on the cash flow side. And we were within a 7% variance of our projections on any assets. And the ones that didn't hit projection had some major issue, like the tenant tore up the property, or there is something that occurred there, an extended vacancy, or some outside issue that occurred because of that. And usually that happens in waves where a tenant moves out, then you have a bunch of repairs and all that stuff to happen, and then you have to build in a repairs allowance, so you put that money aside every single month for those things that will occur at some point. 5 years go by, a tenant moves out or something like that, or a year goes by and they move out. You need to put that money aside for those types of things. So we've seen the cycling on the entire single family home, the entire promissory note aspect of things, as well as multiple mobile home parks where we've done major value adds to these parks and increased the value substantially and refinanced to hold them, as well as resold those parks as well for a good profit too. So we've seen that cycle on that side as well as the multifamily side, because we've just been doing this for 20 years now, So we've had a long cycle though right now on the upside, So
Would you say to the person that says, no, 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 I don't want to pay them that slice because I think that I'll make more money that way? How do you, I'm not going to say convince so much
I,
as show up as the where have you been all my life person? Because I am tired of the termites and toilets and
yeah,
tenants.
I think, when you're talking about um, the difference between the profits that we make for doing the asset management and finding the deals and doing all the workload and taking our part as a general partner versus the cash flow that you're giving the investors, and the difference if they did that general partnership work, it can actually add up to be a good chunk of money. At the same time, sometimes I'm working for $10 an hour. And many times I am working for $10 an hour because a deal doesn't work. And it takes so much time for that learning curve to get from here to here. You're talking years of time to not make those same mistakes. You're actually going to make less money by doing it yourself if you're new trying to do this than you are with another operator. And on top of that, if you do the difference between what you would make as far as cash flow being an LP versus doing the whole GP, and you incorporate the hours, like I'd be the LP all day long doing no work involved if I had unlimited capital to do so, right? I would be doing nothing but investing passively in all of these opportunities myself and doing no active operations because of the amount of work that it actually takes to do that, let alone the stress, let alone the 3:30 a.m. wake ups because your contractor stole money or something like that occurred, right? People don't realize the pain that people go through to get to that point after flipping 1,000 houses. Trust me, I know 1,000 ways I could potentially lose money on a house now, because of that. I also shouldn't have sold those 1,000 houses because I would have over $50 million right now of my own capital from that growth, just with my share of that if I would have just held them in all instead, right? So the lessons learned the hard way, So
But and I live in a neighborhood where I met a guy, my next door neighbor, and he's in the stage where he's just piling up the rental properties, and he sounds so clear cut and cut and dried. And this one dropped below a 12% return, so I'm 1031ing into another one, and my supply is foreclosures. And I'm just thinking, when it's all said and done, if you just took that portfolio, well, that would be a great conversation. So not to have with you, I think you're probably too up your food chain. So how would I bring, let's say it this way, how would CPAs bring their clients to your organization? What's that pathway look like?
So the first thing is understanding what we can actually do for those clients and how great that CPA or that financial planner is going to look to those clients when we provide these types of investments for them. The understanding, one, we have tax strategies built in on a silver platter and have assets to be able to do that on a very consistent basis at all times. We have assets that we're working on that investors can take advantage of either for those 1031 exchanges, for those cost segs to front load depreciation, for passive or for losses on short-term rentals that can be put into active, taken against active income and structured correctly. All of those types, we have those available aspects. Another thing that we do for clients is part of the process of us helping an investor pick the strategies that make sense for them is understanding what they have in their current portfolio and analyzing it and saying, hey, don't sell this real estate right now. Here's how you optimize it. You're 40% below market rents right now, and you need to increase that. What's your CapEx look like that's going to be coming up on that property if you do an inspection on that building? And can you refinance at lower rates than you have right now, or does that make sense to do that? Can you seller finance those strategies for another exit strategy and make an interest rate arbitrage instead and make a much higher return than you're making right now on that asset and get a down payment from a buyer and get a piece of cash back, right? It's the analysis of their current portfolios to optimize them and do highest and best use analysis on what they're investing in right now on the real estate side for the most part, as well as some private equity investments, depending on what they're investing in, to be able to help those clients really push their portfolio to that next level from an optimization, asset management, and quality control standpoint. Because so many mom and pops, for example, my family owns a property in California and killing it in cash flow for years, and all of a sudden in one year $100,000 worth of expenses in plumbing and electrical and all kinds of stuff. And really they just didn't put aside they had the reserves for it, but they didn't put aside capex money consistently, thinking that that was coming when plumbing systems have a useful life, all appliances have a useful life. You got to go take those expenses and divide them by their useful lives and take a piece out every month of your cash flow so you have that reserve where you're expecting it on the other side, instead of just being surprised, oh my god, this property doesn't cash flow, let's sell it, this is horrible. That panic is what we can help stop, so that way they make the right financial decision and have that money set aside. Like, we put aside a vacancy allowance and a repairs allowance because those things happen at the same time every time, right? So usually a tenant moves out, you got a bunch of repairs, right? So like, these are the things that I think having the right structure is what we really help a CPA or financial planner's clients with, to take them to that next level. And it's really complementary. I don't
I,
want the tax work. I don't do tax work or audit work, any of that other stuff anymore. So
I feel comfortable you've built the machine. What I'm asking is, what is the connection? Would they talk to you? Do they talk
uh,
to someone on your team? How does that work?
So typically they just schedule a Zoom meeting with us and myself or one of my investment managers, and we go through and we compile the information we need and try to understand what their goals are within each individual person. If they're saying, I have these assets and I'm trying to get here, I have this big tax problem, we're analyzing that right in that discussion. And then we're saying, okay, well, here's a couple of potential options for you that might work for you. Let's analyze your current situation. Let's look at those options. And then, if you don't decide to invest, you just got free advice. We don't really care because I just pay it forward like this. We don't charge them for these consultations because we make money on the investment side. If we have a certain percentage of people that invest with us and a certain percentage that don't, I look at the rest as karma, and someone's going to come back and give me a referral later on at some point anyway. So that's how we do business on our side, and just help them without actually charging anything for any of that analysis work. And then if we go through and work together on the real estate stuff, then, or the other private equity stuff, then great. If we don't, we don't. We just help somebody. So
Awesome, man. I think that's a wrap. I think uh, in all of our conversations, I think we're up to 4 or 5. You have so much to share.
it's a lot of fun. I hate paying the government taxes, so that's why.
Well, any closing remarks for the audience, being that firm owner that is at 1 million, 2 million of revenue, has that top tier, really special set of clients that how you have either helped them, that population in the past, or how you would want to go forward with that type of relationship.
So the first thing is just realizing that, hey, if they have certain clients that have high net worth, that have portfolios of real estate type assets, we can offer a free analysis of that for those particular clients as a value add to those clients right away. And we just do it to help develop the relationship with the clients as well. And if they end up investing with us, then great. If not, no problem. But the whole idea is, if we can add that value to your client base and be able to help them with that, or add some strategies where they're going to have a tax problem, we can help solve those problems right away with quality assets. We have tons of different investors, hundreds of them that have invested with us in the past, to be able to do all the homework you need on us to make you feel comfortable with, referring us to be able to help with these types of situations. And I'm a
Cool.
CPA. I still have my licenses all current and everything else, of course.
Really? Yeah.
And I just don't practice tax or audit work anymore. I do the real estate stuff. So
Got it. Got it. Well, we will definitely exchange all the stuff to click in or add into the podcast clicks and that kind of stuff.
cool.
But again, thanks so much. Really appreciate you sharing with me again and the audience of Beyond Tax Season podcast.